Goldman Sachs's most shorted basket index was up almost 25% since the start of September. And compare that with the S&P 500, which returned only 6.5%. So imagine if you're running a long short book, your short book just got blown up. So how do you deal with that? I think what happens in those situations a lot of times is that you're forced to obviously cover. Your stops are triggered, or if you don't have stops, then God help you. But you're forced to cover, and that forces you to liquidate the other part of the book, which is kind of what you saw with a lot of momentum stocks pull back on very little news because there was forced selling on the long books in by some of these investors. What makes this matter even worse is that with September end and October coming to an end, a lot of funds have their fiscal year ends closing in September and October. So there was a forcing mechanism with regards to the calendar that amplified this risk unwind. This is a chart of the Mag 7 relative to the unprofitable basket of tech. And these are two Morgan Stanley indices or baskets that are created. And as you can see, for most of the year, Mag 7 and the unprofitable tech basket kind of traded in a range and, with not much really going on for most of the year until you hit the beginning of September. And then you had a cliff decline or sharp fall in that ratio, which wasn't so much that Mag 7 underperformed. If you pulled up the individual charts of Mag 7, they actually did pretty well from September into October. It was more the fact that the unprofitable tech basket had a massive rally in September and into October. And as I discussed earlier, a lot of that was to do with vicious short covering and an unwinding of positions that caused this huge rally in unprofitable tech companies. And you're starting to see that unwind and go back to where it was before. And I think you're going to start to see that as this short covering period has come to a close, particularly with September end and October end, year end for a lot of these funds. I mean, a lot of the short covering is probably mostly out of the way now. I think you'll see this ratio recover with a combination of some of these unprofitable tech names coming back to earth and some of the larger cap tech names recovering as people start to focus more on fundamentals and with earnings coming up and into the end of the year, I think you'll start to see a focus back on fundamentals and the quality of earnings, which I think are long-term what ultimately matter.
Thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.